Assalamu alaikum, everyone. I hope you are doing well. Today is Monday, May 27th, and Bitcoin is back above 70,000. So today we're going to talk about the indicators that point to what I think is a healthy near-term future for Bitcoin, and some of the economic readings that uh, I think we should be paying attention to. So without further ado, let's get started. Not financial advice. Do your own due diligence before making any investing decisions. My goals are not yours. So let's look at the major factor influencing markets right now, and that is inflation and the expectation for rate cuts or lack thereof from the Fed. So if we look at June, for the first time ever, we see, or for the first time since the beginning of the year at least, we see a probability for a rate hike. Yes, that probability is just shy of 1%, so very small probability, but that is being priced in the markets right now. So that is a new development. We'll obviously have another recalibration by the market on Friday when the PCE numbers come out, which is one of the major measures of inflation, and that's set to come out this Friday. In September, the market is basically pricing in a coin toss with regards to whether or not we get a rate hike. So currently we're at the 500 to 525 basis points mark. So there's a 50% chance that we actually, I'm sorry, 525 to 550, 50% chance that we go, that we either stay or go higher, a 50% chance that we go lower. So this will, and the probabilities that the market assigns here will have a very significant impact on the pricing of risk assets. The higher the interest rate, the more money flows out of equities into fixed income instruments. The lower the interest rate, the more attractive equities and risk assets generally appear to be compared to the alternatives. So this is really the elephant in the room. And there's a lot of, as always with the macroeconomy, there's a lot of competing influences, and sometimes those influences will be moving in different direction, and sort of hard to gauge which influence is going to have the bigger impact. But there are some things that I think are relevant to be looking at. So, for example, we've had since 1950, this metric has been rather reliable. So whenever we've had a growth in the unemployment rate of more than 10% year over year, so I'm not saying unemployment reached 10%, but the growth in unemployment has reached more than 10% year over year. Then a recession followed around 1 to 7 months later. And we actually had that in the April reading. We had a growth of unemployment of more than 10%. And this has been a pretty reliable indicator since 1950. So every time we had that, we had a recession within 1 to 7 months. And so will this repeat? It seems to be based on historical precedent that the likelihood of this is high. We can also see other indicators, such as a spike in consumer loans, defaults, that is, on consumer loans. Now, we've seen higher rates of defaults previously. We've seen lower rates in terms of coinciding with a recession in the coronavirus scare, basically. But that was, I think, an outlier circumstance that wasn't related to economics per se. But if you go to, for example, the 2008, 2009 recession, we've had much higher defaults in consumer loans. But it does seem like the trajectory is an ominous one for the economy and for consumers. So this points to pressure on the Fed to actually lower interest rates. And not to mention, the public debt, it has surpassed the GDP and is now currently at around 120% of GDP, which is extremely worrisome for the state of the United States, and and has implications obviously on the solvency and the obviously interest expense has increased substantially because of the increase but also because of the increase in interest rates. So there is pressure, I believe, on the Fed to lower interest rates. So you have the public sector basically reeling from these higher interest rates. You have the private sector reeling as well with defaults climbing. So there is pressure on the Fed to lower interest rates. And I think that the Fed is in a position where it's just looking for a reason to cut interest rates. So if we get positive readings for inflation, 2 or 3 positive readings for inflation, then I think that that will be extremely good for risk assets as the market will start pricing in the probability of a rate cut at a higher and higher rate. Now, in order to navigate these very uncertain times, I think it is prudent to be part of a community like we have at PIF, Halal-conscious investors trying to do good and do well at the same time. You can follow our portfolios move for move by becoming a member. Now, you may be asking, when do I think the switch is going to happen between the impacts of the rate cut and the impacts of the recession? Well, it will happen when the top sort of concern for investors switches from inflation to the economy, and that's when I think the pullback in the market may likely come is so initially I think we'll have a slowing down of the economy, we'll have optimism of rate cuts, but then when those uh, newer probabilities, higher probabilities for rate cuts get priced in, what's going to happen is we're going to have uh, economic indicators and earnings come in slowing down, and then that may pull stocks and risk assets lower. And I think that's a good time to um, sell some of the riskier side assets and move into less risky assets. So we'll probably have a blow off top before that happens, and that's really the time when you need to make the switch. So we'll be watching that carefully. Now, speaking of risk assets and upcoming blow off tops, which I think are coming, let's talk about Bitcoin, which we mentioned is now hugging the 70,000 price. The Bitcoin MVRV score is rather healthy at this point and points to additional potential upside here. So the MVRV score compares the market value to the realized value and the variation between them. So how many standard deviations there is difference between them. And the market value is what Bitcoin is being priced at. Realized value is what people paid for it. And when the standard deviation, reaches, on something on the order of 7 or 8, then we're in the clearly at a danger zone. You want to get out before then, once we're approaching that red banner at the top here. But we're well below that, and we have room to run. So I think this is a healthy indicator for Bitcoin at the moment. Relative strength is in neutral territory, I would say, with a bias towards overbought. Everything above 70 is considered overbought, and for May, we're right around 70. So I would, and you can see every dot here on this chart is a different month, and so you can see that there's still a lot of room upwards in this bull cycle to go. If you compare with historical patterns before we top out for this run. So this is, I think, another I would categorize this as perhaps neutral indicator, but definitely something that's not telling us that we're at a top yet. And also, I would refer to the fact that the thesis for Bitcoin, obviously, as a hedge against inflation, as a hedge against, as a way to store your purchasing power over time, that thesis is stronger on account of just the uh, uh, the printing and the forecasted printing that is in store for not just the US dollar, but for all major fiat currencies. So that thesis is intact. But the sort of criticism that Bitcoin often gets is that it has too much volatility. It's not a stable asset. Well, when you zoom out and look at the volatility, realized volatility over time, that number is going down. So the attractiveness, I think, of this asset is increasing with time. And Bitcoin miner revenues have been recovering. Obviously, we got the drop in Bitcoin miner revenues. That's that yellow line at the bottom. The black line is the price. We saw the drop after the halving, which was expected. And there was a drop in Bitcoin miner stocks prior to the halving in anticipation of this drop in revenue. But now we're seeing a recovery in Bitcoin miner revenue, and should add in Bitcoin miner stocks, including the ones that we have in our portfolios, which is a good thing. To follow our portfolios, as mentioned, and to become a PIF member, link in the description. We'll go to questions very quickly. Who did the hair transplant, or a hair implant rather? I'll probably make a video about it upcoming, inshallah. I did want to wait just to see how it actually ends up being a year after I did the implant, so that I don't tell people, okay, it's great, I had a good experience, and then a year later, something happens. So I just wanted to take my time before actually sharing my experience. Salam, brother. But yeah, I'll let you guys know. Salam, brother. Any halal fixed income options for retired individuals or sukuks? Good low risk investment. Wa alaikum salam, Ahsan. So, generally speaking, when things are fixed income, they are indicating that there is some type of debt involved and interest on debt. Typically, when things are profit and loss sharing, which is what Islam espouses, the income is not fixed, and it's possible for the income to vary without the payer being in default. So typically, fixed income options are not halal. They're pretty much interest bearing debt. Salam Rashad, nice to see you. Do you think the weakness of commercial real estate is not a good reason for rate cuts? I think that, like I said, there's a confluence of different factors that are sort of hitting against one another, and it's really hard to figure out, what is the impact of each one of them. So, and which one will win out. I don't think commercial real estate is the one of the most important factors. I think that the solvency of banks is an extremely important factor, and definitely rate hikes would drive the value of the fixed income securities that banks hold on their balance sheets down and make them even more insolvent, for example. So that's a more, I think, pressing influence on the Fed. One of the top pressing influences on the Fed that makes a rate hike, I think, highly unlikely. If you look at the state of banks in the United States, there are hundreds of them that are not in a healthy position. And by the way, I would say if you have a substantial amount of money in a smaller bank, I would probably move that to a bank that's considered too big to fail, something like a JP Morgan or a Bank of America, because a lot of these banks have taken a really big hit on the. We already know that banks, because of fractional reserve banking, are insolvent, and so in normal cases, they're insolvent. These banks ended up stacking a lot of fixed income securities when money was cheap. And these fixed income securities had very low interest rates. Then, when interest rates rose, the value of those income securities fell because they're paying a lower rate. And so the assets on the balance sheets of banks had to be marked down, which made them even more insolvent. So I don't really, aside from the factors that I mentioned, I don't really see the Fed being influenced by commercial real estate specifically. Alaikum salam, Abdullah. Do you think it's too late to invest in Bitcoin or Dogecoin? We do have the buy prices on our watch list and PIF, so I would consult those. I think you remember. So consult those to see where our latest buy below, sell above prices are. Assalamu alaikum, brother Akan from Sweden. And I'm not actually withholding information. I just don't like walk around memorizing those prices at every given time. They do change. Assalamu alaikum, brother Akan from Sweden. Wa alaikum salam. Any alt to Bitcoin or ETH? Well, I do have Dogecoin, and I've spoken about that a lot on this channel. So I think there's a lot of merit there. Well, I think a lot is a relative term, but I think there's a non-trivial chance that Dogecoin performs well in this bull run. Assalamu alaikum, brother. They're expected to dip below 60 in the upcoming weeks. Probably not. I'm assuming you're referring to Bitcoin. Probably not. I think there's a lot of positive pressures that pointing upwards that I've went through some of them in this live. Wayakum, thank you. I really appreciate the well wishes. Will you tell us why you went back from Turkey? Inshallah, in the same video, I will. Any thoughts on going to a Muslim country? Inshallah, I will share those. I haven't really looked at Al Baraka Turk, perhaps something in the future. But I will say something that I'm very bullish about is investing in Muslim countries. And inshallah, we'll be doing a lot more of that in PIF. I think there are a lot of good deals for companies that are undervalued in places like Turkey and Indonesia and Malaysia and other Muslim countries that I think are on the rise and have a lot of undervalued opportunities. So we'll be, inshallah, focusing or putting more focus on them in the coming days and weeks and months at PIF, inshallah. If you did enjoy this live, do leave a like, hit the notification bell so you know when we go live and you don't miss any. And yeah, let me know what you think about the live. If you have any questions or topics that you'd like to discuss in future lives, leave them in the comments. Until next time, take care of yourself. Assalamu alaikum and peace be upon you all.